you filthy animals. Welcome to the jungle. My name is Baloo the Bear, and here on the channel, we take a simple approach to cryptocurrency. We take a look at the charts, we take a look at volume, and we try to match that up with fundamentals and sentiment. So in today's video, we're just going to do a market update. I have been on vacation, so this is the first stream to the North American crowd. So good evening to the North American crowd. Good morning if you're watching in the morning. Good afternoon if it's afternoon to you. Hello to everybody. It was a nice few weeks off. We're going to take a look at the DXY. I want to take a look at the S&P 500. I want to take a look at the NASDAQ. We'll take a look at a few random altcoins that are popping off, and I emphasize random. I think we're in a little bit of a popcorn season, so we'll dive into that as well. But we will start it all off with the king of all crypto, and that is Bitcoin. All right, so we are going to start out here on the weekly chart, and we had a pretty decent weekly close. So we've been underneath this 200-week moving average here, and we did manage to close a candle on top of it. Now, the price action since that has happened has been very lackluster. I'm not seeing a ton of demand for such a solid close, which is indicating to me that there is a possibility that this is a fake out, and there's definitely the possibility that this weekly close, this weekly candle does end up closing back below the 200. So we do need to watch out for that. It's very early in the week. We still have about 6 days left in the week, so it's a brand new candle. We have a lot of price action ahead of us before we can determine if this is going to be a bullish close or not. So when we go into the smaller time frames, we're still in a bear flag formation. We are still in a very volatile phase A, phase B. Doesn't matter. Phase A and B are not tradable phases. What we know is that the volatility is not reducing. So because the volatility is not tightening, the spread is not tightening, those are more characteristics of distribution. If you're new to the channel, we study the Wyckoff method, analyzing the price behavior within a set trading range to determine if it is accumulation or distribution. Accumulation implies that you can have a price advance. Distribution implies that we're preparing for another leg lower. So as it stands right now with the current price action, it's showing more characteristics of price continuation to the downside. That doesn't mean that we can't get a rally. It doesn't mean that we can't come up to, the underside of this area right here. We could begin to, trade on top of the consolidation and come back into this area before a reversal back down. But given the current context here, we do have a little bit of a divergence occurring, an exaggerated bearish divergence here on the top. So I wouldn't be surprised if ultimately at this point, actually let's go down to the 4 hour and really break this down. I wouldn't be surprised if we lose this level here at the 200 week and come back down for another test of the lower end of the range. If we fail to hold that test, if we fail to hold that range and break below this low, then I would anticipate that we get a move down to $18,000 and continue our sideways trading environment. So those are the levels that I'm looking at right now. Still kind of focused in the short term on the 200, that blue line on the chart. If we fail to hold levels at the 200, then we'll probably come back down to the lower end of the consolidation right here. If we fail to hold that, then we'll come down to the level of the seller's climax down here at around 17.5. So those are the levels that I'm looking at. Now, a lot of this is dependent on what is going on in traditional finance. So we've been watching traditional finance for a while, specifically the NASDAQ. And the NASDAQ is in an interesting spot, as we mentioned on the last stream for the European show. We have this support/resistance here where it was support, flipped into resistance, now up against resistance. So if price can reclaim this SR level, that would be a positive thing. But as it stands right now at the current level, we are looking more for a rejection back down to the levels of around $11,000 to $12,000 here on the E-mini futures NASDAQ. Now, it's not all bad. If we go and take a look at the S&P 500, as we've been saying for months and months and months, even when people were extremely bearish, convinced we were going down to lower levels, we talked about the mean of this channel. Let's go to the weekly chart here. We talked about how the mean of this channel here has held support and has been an area of a bounce several times. So you can see we bounced here, here, held support here, like lots of areas where this middle of the channel has held support. And as it stands right now, we are holding support and we are rallying off of that. So potentially best case scenario that I can see here in the S&P is a possible rally up to the top of the channel, maybe coming in for a double top before a reversal back down. But ultimately the fundamentals of cheap money are going away. So it's going to put a lot of strain on the supply side of the markets globally. It doesn't matter what market you're in. There's going to be a lot of supply side pressure coming into the market over the the medium to long term. Well, those are such, what is long term, what is medium term, blah blah blah. But in the medium term, in the short term, I think we could rally. In the medium term, we are still fundamentally bearish because money is no longer cheap. Markets rally when money is cheap. Interest rates are climbing. We're going to have to step in and fight inflation harder because the inflation is still at high levels. So this will have a trickle-down effect on the amount of supply that enters the market. So it's not looking good from a fundamental perspective, but speculation is speculation, and markets can remain irrational longer than you can remain solvent. So understand that you can have these rallies that are against a fundamental. It's perfectly normal because that's how markets move. All right. Now we can take a look at some of the altcoins here. Let's take a look at Ethereum. Ethereum is already in its rejection zone. So this is kind of the area that I was looking at. This is a very significant support / resistance flip that on the Bitcoin chart is about 30K. So because on Bitcoin it's 30K, we're not up there yet. But Ethereum has already come out of its consolidation and come up to that area. So it is possible that Ethereum is kind of leading the charge in the cryptocurrency market, and it's already up against its macro resistance. If it gets a rejection here, that's not going to be a good sign. But if it can reclaim this level at around 17, what is the level? We'll call it 17.5, but realistically I'd be a lot happier at 18. So if we can clear 18 and start closing whole candle body closes above $1,800, that'll be a very positive sign for Ethereum. But as it stands currently at this exact moment in time, we are right at the resistance level. This is the harshest resistance. It's been support here, support here, support here, here, resistance back here. It's very, very strong. So understand that it's working against a significant amount of resistance here. The silver lining to that is if it does break through it, then you should get a decent move. So do be prepared if there is a breakout on Ethereum at around 1800. You could probably go down to some smaller time frames and see if you can catch some basis points up there. Now let's take a look at some of the shit coins here. If you guys aren't already in the Discord, check the links below. Very supportive community. If there's a project that you're interested in that you want to have, a team of veterans take a look at and give our honest and open opinion, then feel free. If there's stuff that you're looking at that you think has potential, bring it to the group and we'll have a look. Let's take a look. 24-hour change here. Chili's shitcoin, Celsius shitcoin, Theta shitcoin, Gala shitcoin. What's the 7-day averages? Filecoin, Ethereum Classic is a fucking nothing. Celsius again, Chili's. Okay, so what I'm looking at here is popcorn season. Popcorn season is when liquidity on the order books is very low. This happens in a bear market, okay? This happens probably every bear market. This is when the pump and dump groups come out. This is when the whale pump groups come out. And what's going on is liquidity is so low, meaning that there are so few orders on the order book. It's very easy to move price. It is very easy to move price. You need, if you're an investor, if you're looking at these as kind of long-term holds, you need to be on your top guard, because you can really get faked out in this kind of environment here. Popcorn season is gross because it convinces the market that we're in a bull market, and there's just nothing on the macro level that supports that claim. We're simply not in a bull market. So do be careful out there with these kind of 20, these double digit moves. They're going to start to convince the herd that, we're back on. I can tell you right now, there has not been enough time in any accumulation for the composite operator to accumulate a position. If smart money doesn't have a position, you ain't getting a bull market. And that's just the long and short of it. We got a first time chat here from Only Loud 420. YFI, maybe. Let's take a look at YFI. The YFI app has been doing fuck all. It really hasn't had much development at all. Its governance model is becoming outdated. So I do think that the coin itself at a fundamental level is shitty. And it's getting, in a liquid pump. Let's get my pointer here. Yeah, this is a disgusting distribution here. At the very best, you're looking at an automatic rally. So let's actually pull this onto the weekly here. Let's stretch it out. So this is just your textbook distribution, just rounded top with tons of up thrusts, up thrust. Last point of support, last point of supply rather, and then a relentless downturn. So you're looking at a possible seller's climax into a probable automatic rally. So this is where the trading range begins, okay? This is why it's very important, this is why I love the Wyckoff method. Because the Wyckoff method just shows you so much patience. Because you'll look at a rally and you'll be like, okay, cool, automatic rally. You don't care. It's giving you signals and giving you confidence for the trade that comes months later. So if this is the automatic rally, we're going to begin our trading range. So the next thing is we come down for our secondary test, which is all the way back down to the seller's climax. And then we start to show characteristics of accumulation, which is a tightening of the spread as the market grows really, really boring and retail loses interest. Then you potentially get a spring where you drop out of the consolidation, come back in. At which point you're going to see the liquidity come back into the asset. You're going to get a move to the upside, and then it can break out of the sideways trading environment. As it stands right now, you don't have anything close to that. Let's just remove that. You don't have anything close to that. We are in a downtrend. Downtrend is continuing. Even this large rally is coming at the underside of the previous support. So you have nothing on the macro that's showing you that you have the ability to rally here. Just because you have large percentage moves doesn't mean that we're back on. Nothing goes straight up, nothing goes straight down. And we zigzag throughout the markets, ebbing and flowing, rallying and reacting until we tighten the spread and show sideways accumulation. Only at that point are you going to get a bull market. So if you're looking at YFI as an investment, I would advise against it as an investment in the short to medium term. If you're looking long term and you have a lot of conviction in YFI, I personally don't. But if you disagree with my analysis on the fundamental side, and you're looking at this as like a 5 to 10 year thing, then yeah, by all means, you're in the value zone. But coming at it from the Wyckoff perspective and from a trading point of view, this is just more of the same, more downtrend, rallies and reactions with an overall trend of down. So if you're not looking to become a participant at the creation of an uptrend, we don't have a creation of an uptrend just yet. What effects do you think the ETH fork will have on ETH and the altcoin market? Is it a fork? Is it a fork? I don't know. They've been calling it a merge. I actually don't know the technicals onto what it is. I think long term, it's a tough one, Kahuna. Like, nobody has a crystal ball. I can tell you what I think, but what I think is just as valuable as probably, anybody else out there that wants to take a stab at the dark, because we don't have a crystal ball. What I think the ETH merge will do for Ethereum is I think that it will cause deflationary effects, which will cause a bullish narrative, which will cause Ethereum to rally. Now, what that means for the altcoins, I haven't got a fucking clue, because most of the altcoins out there are completely useless. I would say 90 to 95% of them can be erased tomorrow and nobody would bat an eye, except for the dumb plebs who invested in them. But for Ethereum, the ETH merge introduces a very deflationary force in Ethereum, which I think is a very positive thing, because it's going to have similar effects to what Bitcoin has with its halvening. So this is, supply and demand and a bullish narrative. If we can get demand exceeding supply, it'll be a good thing. Do I think it's going to happen as soon as we flick the switch and we're on ETH 2.0? No, I don't actually. I think that ETH 2.0 is going to be a sell the news event. I think a lot of people are going to expect ETH 2.0 to cause Ethereum to rally because it will have a deflationary characteristic attached to it. But the reality is, if nobody wants to buy something, it's not worth very much. Everything in this world, everything on the planet is worth as much as somebody is willing to pay. I do not care how your token is designed. I do not care how it is inflated, how it is deflated, how it is minted, how it is burned. It doesn't fucking matter, because if nobody wants to buy it, it's not worth anything. Now, that's an extreme example, and I'm not saying that nobody wants to buy Ethereum, but I think that the demand in a bear market is low. That's what defines a bear market. We have more supply than we do demand. So the ability for retail to keep the price of Ethereum up is very, very difficult. So ultimately what happens is the price declines. Now we have people holding on to hope, thinking that the ETH merge is going to solve everybody's problems and we're going to rally. What's realistically going to happen is we're going to rally in a very short time period, maybe a day or two, maybe 3 days of a rally as a result of the merge. Then Ethereum's going to stall. It's not going to do anything, and then we're going to reach lower lows. That's my thought on what I think is going to happen with the ETH merge. And if the macro trend continues to hit lower levels, then we're looking at much lower levels in Ethereum. We're looking at much lower levels in Bitcoin. We're looking at much lower levels in the total cryptocurrency market, period. So I think that a lot of people have high expectations for the ETH merge, and that's why I think that it would be wise to at least consider counter trading the sentiment of the herd, because the herd's quite convinced that we're just going to rally as soon as that merge happens. All right, what else do we got here? Let's take a look at some of these shit coins here. Cardano. Let's actually do some alphanumerics analysis here. Let's throw alphanumerics on, see how we're doing on the weekly, our kind of shitcoin bingo. Let's go to shitcoin bingo. All right, alphanumerics is on. Auto, let's stretch this out a little bit. All right, so Cardano has just gotten on top of the 7 EMA, which is a positive sign. That's what you want to see. Again, Bitcoin's doing the same thing, but it's not rallying off of that. If it was truly a bullish close, which had bullish demand and bullish sentiment coming into it, we would be rallying, and we're not. I realize it's only a day, so a lot can change in a few days on a weekly close. But as it stands right now, we're not rallying off of that bullish close. But Cardano is sitting above the 7, which is good. It's a step in the right direction. Ape sitting above the 7, that's positive. Kronos sitting just below the 7, probably get a rejection. Doge sitting below, probably get a rejection. Shiba sitting above, potentially could rally. Solana sitting below, getting a rejection. Theta sitting above with a decent weekly candle. Actually, Theta's looking not too bad as far as a potential rally. Maybe it gets a rally up to 225, something like that in the bullish case scenario. VeChain actually getting above, not looking too bad. Possibly gets a rally up to 4 cents, maybe even 5. XRP, who gives a shit? Zilliqa sitting below. GMX way overextended. This is a coin I'm quite interested in getting a bear market position into, but certainly not at these levels. I would be much more interested to be a buyer at $15 and below for GMX. And looks rare, another one that I'm looking to campaign a large position into, and it currently looks like shit. So it's in a good spot to start DCAing for those who are interested in the looks rare protocol. If you are bullish on NFTs and bearish on the long term of OpenSea, which is not something you should really be bearish on. OpenSea is a fantastic platform, but looks rare is a good competitor to them. I just think the governance model of looks rare is better. There isn't a governance model for OpenSea, but yeah. Baloo, do you like NFTs? I do, but you're going to have to define. I think that the technology of NFTs are going to revolutionize online commerce. And I think that, you know, projects like the Bored Ape Yacht Club are way overvalued. They are not anywhere close to reality in terms of what the purpose of an NFT is and the value that an NFT provides. I think NFTs can provide an incredible amount of value, but the value shouldn't be just being able to mint more shit and get more shit for free. Like, the value should be tangible in real life value, which we don't really have a project that does that yet. The thing about NFTs is NFTs need to be adopted into applications. So right now we have the tech, and it's really, really important tech because it's the best form of digital ownership that you can possibly have on the internet, which is revolutionary. But the next piece that we need to that, to add to that, is application support. Instagram needs to integrate NFTs. Facebook needs to integrate NFTs. You know what I mean? Like, we need apps that people use in real life to integrate property ownership into NFTs. Your car title shop needs to integrate NFTs. Your home title office needs to integrate NFTs. NFTs have an obscene amount of value, but today they're worth basically nothing. It's all speculative. I think that the NFTs are fantastic, but if you think I'm like looking at pictures of monkeys and owls and lizards and thinking that it's a good idea to buy, the answer is no. The answer is no. The NFTs that I would be interested in buying would be VIP access to alpha groups, and because you're getting value from that NFT. If you buy an NFT with the plan to sell that NFT, it's already a shitty NFT, in my opinion. When you go out to buy an NFT, you're buying that NFT as an investment in the value that the NFT is going to provide for you. And I just don't see that narrative. I don't see that sentiment out there. People buy NFTs with the intent to sell them. I want to see us get to the place where people buy NFTs and they're never fucking selling them, because the NFT itself provides so much real world value that they're so happy. They're so happy that they made this purchase of this NFT, that they own this, that they own a fraction of the community in the form of an NFT, and they get so much value from it. They would never sell it because it makes no sense. They get less money selling it. So no, don't like the current iteration of NFTs. Did you hear about the Solana physical storefront? Thoughts? I think Solana has a lot of VC backing, and they have really good marketing teams, and a lot of people will be onboarded to Solana. I think that Solana, here's the thing, and here's the thing that causes a lot of controversy and confusion. There's two worlds emerging. There is the cypherpunk, unconfiscatable, immutable blockchain world, which is the origin story of Bitcoin. We started Bitcoin to say, fuck you to the government. We're taking control of the money. You can play by our rules because you work for us. There's that side of crypto. And then there's the new world of commerce and legal interaction and, and not decentralized, just a better form of securing assets on the internet. So there's two parts, there's two worlds. Solana is not decentralized. Solana is optimized for internet commerce, internet membership management, and a lot of stuff that, if the government decides, hey, Solana, we're actually going to shut you down, Solana is going to be like, oh shit, I guess you're shutting us down. So that's not the end of the world, though. That's not the end of the world. So, there's a lot of cypherpunks in the crypto community that think, decentralized or bust. Forget it. If it's not decentralized, I'm not interested. And that's a little short-sighted because there's a lot of things that we do in the world that are legal and compliant. Most of the things that we do in the world are legal and compliant with what the government says. Adding a blockchain to compliance is not a bad thing. It's a better way to organize the internet. So, with Solana onboarding users to the legal and free, and compliant side of the internet, I think it's great. And I think a lot of people are going to make a lot of money on Solana. Physical storefront, cool. They're going to be forced to set up wallets. They're going to be forced to, buy merchandise with Solana. It's going to be a great thing for Solana. It's not kind of the reasons that I'm in crypto for my kind of esoteric purposes of what makes me excited about cryptocurrency. But hey, people got to make money, and Solana can be a good way for people to make money in a compliant way. Retail will always get fucked on Solana, but venture capitalists and business owners will do quite well adopting the Solana blockchain because it's so user friendly and it's already got a large community. It's easy to set up. It's compliant, and a lot of things are beneficial for a company to do their Web3 business operations using the Solana blockchain. Retail adoption, yeah. The problem is retail is going to adopt into a system where they're controlled. So, they always get fucked. But hey, that's not new. Retail always gets fucked. Tiffany has entered the NFT market. I don't know who Tiffany is. Like the jeweler? I'm seeing a lot of adoption on name brands entering the NFT market because name brands really struggle with cannibalization of sales from fakes. I'm like a 20-minute motorbike ride away from Patong, where there's entire fucking markets, man, where you can buy a Gucci bag for $20. You can buy Apple AirPod Maxes for like $100. Like, it's fake city. NFTs are it's just turnkey. It is turnkey. If you are making a leather bag, you just emboss a QR code onto that leather bag and assign it an NFT. You have an immutable, verifiable product on the blockchain that proves undoubtedly with one scan of your phone, this bag is authentic. That's dope. It makes a lot of sense. So a lot of the big brands, Dolce & Gabbana, Tiffany Jewelers, I don't do big brands. Don't wear designer shit, but you know what I'm saying. Like all the designers, Prada, Dior, blah, 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 all of them. It's so easy. It's so easy for them to get some sort of leather emboss machine, which can customize the QR code and just emboss, like imprint the QR code directly on the leather. And boom, you have a legitimate way to authenticate your product. It's turnkey. It's ready to go. I think it's a really good move for these name brand high-end designers to be adopting NFTs and blockchain. Which is why I think looks rare is a good option. It's a good option, but you know, it's definitely in DCA mode right now. So going back to Bitcoin, what we're looking for is this level to hold, the 200. If it fails to hold, we're going back down to this level right here. Possibly a little stall here at around 21.7, but ultimately back down to the lower end of the range. If that fails to hold, we're going back to 17.5, which is what I want to see. I want to see volatility reduce. Volatility has only, it's been remaining constant. We need to see a reduction in spread. And what that means is, like, you know, we're not seeing a tightening of the spread throughout this consolidation. It's just been consistent in the context of a downtrend. So that's showing continuation. What if the QR code just gets copied? There's got to be a way. It's a good point. It's a good point. What if the QR code just gets copied? What they might have to do is implant it. I don't know. There's a way. There's a way. I'm not on the bleeding edge of innovation in the verification of these things, but you make a valid point. They can copy it. That's a lot of work, though. That's a lot of work. And they need special equipment to be able to emboss a QR code. Like the machines that are actually going to emboss onto leather to do that, that can change the QR code every single bag that they print. You know, it's going to be hard to fight that. It's going to be hard to recreate that, is what I mean. But you're right. You're right. The potential's there. I just don't know exactly how they're going to execute on it. All right. Is there anything else? Is there anything else? Let's take a look at what's pumping. Filecoin has been doing quite well in Ethereum Classic. So let's take a look at Filecoin. Yeah. But we're just at a floor. Show me one sustainable rally that hasn't done a double bottom. Show me one. Show me one sustainable rally that hasn't done something that reaches a floor, rallies, and then tests it again. I dare you to try and find me that. So that's basically, you know, what we're looking at here is we need that double bottom to form. How high we rally, it doesn't matter. It's showing strength off of a floor, but it needs to test the floor again. Otherwise, you're not going to convince big money. You're just not. And if big money doesn't get in, you're not going anywhere. That's the long and short of every fucking trading story, period. If big money's not there, you ain't getting any money. Corona dump. Yeah, no, that's a double bottom, man. That was a double bottom. Let me show you. Corona dump. Boom, boom, double bottom. Bear market, double bottom. It does it every single bear market. Let's actually go to log chart here. Corona is what sparked it off because everybody was waiting for that double bottom. We came, hit it once, hit it again. Hit it once, hit it again. This was really early. I mean, we don't even have the last bear market here on the index chart because this one starts in 2011, which I guess is the first time it was charted. But yeah, I anticipate the exact same thing. So, you know, you got your top, you got your low, you got your low. You got your top, you got your low, you got your low. You got your top, which this one's debatable. We'll call it a double top. You got your low. You got your low. That's just how it goes. We have lots of time, in my opinion. And people don't like to hear that because they want to be rich tomorrow. But if you understand the Wyckoff method and understand how accumulation actually has effects on the market. That's what's so significantly different about the Wyckoff method, is it's not just fucking lines breaking. It's not just like triangles drawing. It's measuring how much of the supply is available on the market. And when the supply on the market shrinks because the composite operator has accumulated it all and locks it up, it's gone. It's gone. And then retail comes in and there's this little tiny bit of supply left. There's this little tiny bit of supply that the entire world starts fighting over. And because all the world is fighting over this tiny little supply, you get markup because demand is way higher than supply, and that's how you get a bull market. The composite operator has not had enough time. Period. Period. End of story. Not enough time has passed for the composite operator to accumulate an appropriate position. Okay? It takes time. A lot of people don't understand this, because when you want something from crypto, you go to the exchange and you buy it. End of story. Big whoop. Not hard. A whale can't. A whale can't do that. If a whale wants to spend $1 billion on Bitcoin, they need to go to the market and they need to buy a tiny little fraction of what they wanted. And then they need to wait. They need to wait for the order books to reshuffle. We need to wait for retail to stack up their orders. And then they need to go back and they buy another tiny bit. Because they're not going to blow through the fucking order book. They'll just destroy their trade. So they buy a little bit and then they wait for the little peons, the little retail investors to reorder, reshuffle the order books and decide upon price. And then they go back in and they buy another tiny little bit. And for them to get to their position, whether it's $100 million, $1 billion, $10 billion, $100 billion, whatever the fuck it is that they're wanting to purchase as an investment, it takes them like at minimum 18 months. It takes them 18 months to even be able to pull that liquidity out of the market, because they have so much money, they literally cannot buy it. They can't buy it. It's not there for them to buy. They have to buy a little bit, let the market restock the shelves, buy a little bit more, restock the shelves, buy a little bit more, restock the shelves, buy a little bit more. And then by the time they're finally happy, okay, I finally got my $10 billion position, 2 years has gone by. Then you get a bull market. There hasn't been enough time. We haven't had enough time. All right, on that little jewel of information as to why the Wyckoff method is different, I'm going to close it out there. If you guys are interested in a Wyckoff boot camp and learning the Wyckoff method and understanding how to position yourselves in the market so that you can position alongside smart money, the only people that win in these markets are smart money. So you need to know how to identify their movements in the charts and how to position yourself alongside them and trade the way that they do. If you're interested in learning the Wyckoff method, links below. We'll see you in the jungle. There's also the free side of the jungle too. If you guys have any projects that you're interested in getting some scrutiny from a team of people who have been in the market for a while, come into the free side. Say, hey, what do you guys think of this project? Is this legit? Is this shit? Is it something worth a punt? Whatever the case. We encourage you guys to, come in and hang out. It's the best time of the market to get engaged with the community, because you're going to need support when things start happening again. And they will. They always do. This is how the markets work. The markets don't go linear. They go bull market, bear market, bull market, bear market. So get involved with a community that can help you gain clarity on what the future rally could bring, and then get consensus on when you think the market's going to take off again. So with that, I'm going to leave you with that. And thank you all for joining in. And please trade safe. It is a jungle out there. Peace.